Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 8th of December, and we have with us our guest today, Kelvin Wong, Senior Market Analyst at Oanda. Now, Kelvin, great to have you on the show coming out from Singapore.
Good to see you again, Brian, and happy Friday.
Now, Kelvin, for a start, let's take a look and see how markets across the region have been performing. We're going to start where you're at in Singapore. The STI is up 1.02%. We have then Bursa Malaysia, which is up marginally 0.05%. Shanghai is up 0.46%. The ASX All Ordinaries is up 0.21%. The Nikkei is bucks the trend. It's down 1.78%, and we'll talk about that a little bit more later. The Hang Seng is up 0.42%. Rounding up the numbers, we've got the Kospi, which is up 1.08%. So pretty much a sea of green, with the exception of the Nikkei, which is down significantly. Tell us why, Kelvin.
Yeah, so primarily the Nikkei over here is down at this point down, underperformed the Asia Pacific benchmark indices is due to the fact of the significant strength that is seen in the Japanese yen overnight. So that actually impacted the key, we call it car manufacturer in Japan, like Toyota or this, and Honda. So these stocks are biggest component weightage in the Nikkei 225. So that's pretty much explained their underperformance seen today. But however, in the Japanese stock market, before we go on to the dollar yen story, is that there are several key components inside the Japanese stock market that's actually outperforming the main Nikkei 225 benchmark index. Is actually Japanese stocks. So you look at the topics. Bank ETF, they actually, I think, rose close to about 1.5% today positive against the Nikkei 225, which is still in negative territory right now as we speak.
Now, Kelvin, is this then, are there signals, therefore, with the strength of the yen, which is at a 3-month high, that perhaps
Yes.
there is a potential change of monetary policy at the BOJ?
Yes, precisely. So if you look at the way how the remarks that's being crafted out by top BOJ officials yesterday, firstly, let's start with Governor Yuda first. So Governor Yuda actually replied to a parliamentary remarks yesterday asking about the future potential monetary policy in Japan. So he stressed that end of the year, which is now, and into the early part of next year, BOJ monetary policy will be getting more challenging. And also he did stress that there's actually several options that BOJ could consider once it exit its ultra decade long plus of short-term negative interest rate policy. So the mention over here is that he mentioned several options to consider, because prior to that, BOJ Governor Yuda stance was that in order to consider any options, he need to see a substantial rise in Japanese wages, and that could only be much more certain after the nationwide spring wage negotiation that's going to take place next year. So that's talking about somewhere around March to April. That's yet to materialize. So yesterday's speech by him actually struck a tone to the market participants. And on top of that, there's also another speech, public speech made by his number 2, which is the Deputy Governor Himino. He did mention that over here is that an exit from the current ultra loose monetary policy in Japan, that means i.e. short-term negative interest rate, could actually benefit the Japanese economy right now. So given this sudden, we call it bizarre shifts in hawkish rhetoric, before the outcome of next year March wage negotiation, that's the key event that BOJ officials are watching before they could actually consider an option to exit the current short-term interest rate policy, has started to shift a tilt. We call it a BOJ pivot right now, from negative interest rate to positive interest rate. And in fact, the interest rate swap market has started to price in the upcoming BOJ meeting, which is on the 19th of December. That is actually right after the Fed meeting on the 13th of December, to have a 45% chance that BOJ will exit this current short-term interest rate policy on the 19th. So that's quite pretty much hawkish. That actually explain that very swift down move or swift strength in the dollar, in the yen yesterday.
Now, on a different note than Kelvin, I want to take a look at what are the key concerns of investors today, and what are they watching out for? And really, it's the later today non-farm payrolls. What are the expectations out there?
Okay, so for sure, what we could see over here is that if you look at the current expectation of market participants based on the Fed Fund futures market, that means the pricing has been calculated by the CME Fed Watch tool. So if you look at the last 2 weeks, the Fed pivot has been getting increasingly optimistic. That means, i.e., we are now market participants expecting that the Fed will not hike anymore. So the terminal rate will be at the current rate, the Fed Fund rate of 5.25% to 5.5%, and the Fed will start to cut rates as early as March next year. And even the market participants, based on the expectation on the CME Fed Fund futures calculation, they start to pencil in close to 5 rate cut in 2024. So they're actually expecting much more of a soft landing. It means more of a soft landing, but rather of a hard landing scenario for the Fed to be so aggressively cutting rates at this pace. And current pricing right now, in fact, now has started to price in 0% chance of any rate hike in 2024, pardon me, in 2024. So definitely for sure, right, this we call it today's NFP data before next week FOMC meeting, which also will see the release of the latest dot plot, will be pretty much crucial because market is still expecting a slight increase of 180k jobs added from 150k recorded in October. So that's still a rather low number, below the 5-month moving average of around 230 and 250k. So right now is that if the US job market continue to surprise on the upside, that means if these job numbers start to come in about 210, 230 range, that could actually dial back expectation on this ultra dovish expectation for the Fed to actually cut as much as 5 interest rate cut next year. So if that scenario starts to take shape, that means the job market surprises on the upside tonight, potentially we will start to see a bit of revival on the longer term US 10-year Treasury yield, rebounding from this level. And that could actually suck up a bit of positive animal spirits that's been seen in the US equity market in the last 1.5 months.
Now, on that note, Kelvin, thank you very much for your insights, points to consider. Thanks for coming on the show.
My pleasure, Brian.
Now, we've been speaking to Kelvin Wong, Senior Market Analyst at Oanda. This has been BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out this interview on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.